Well, today's the big day. Myself, I'm a Forex trader, a seasoned Forex trader, but when it comes to futures, I know pretty much nothing. So today I've come to school, back to school again, to learn from the master himself, Ben. I want to know everything about futures. To start with, a very simple question, are they similar?
So absolutely, yes. Particularly people that trade indexes, it's a very easy transition. You being more Forex based and currency based, there are some differences, but overall we're doing the same thing, right? We're trying to expose ourselves to leverage to trade in the financial market, whether it be currencies or indexes, and futures realistically open you up actually to a broader realm, even though the Forex market is still much bigger.
Interesting. Can I use my Forex strategy on futures?
Absolutely. So I actually tell people, hey, you should not be changing your edge when you come to futures, right? You spent years building up your Forex strategy. It's what has worked for you. Don't throw that away coming to futures. You're going to be trading contracts instead of, lots now. That's all you should think of it though, not that I'm throwing away my entire strategy and what has made me a profitable trader.
What is the difference between contracts and lots?
So it's different sizing, right? The same way that one lot of gold is obviously going to move different than one lot of UJ. It's going to be very similar to futures in the sense that each contract is going to be different size. For example, ES is the S&P 500 future. That one contract, 1 point on that is going to net or lose you $50. Then NQ, for example, is 20. So you're essentially exposing yourself to 50x leverage on ES, 20x leverage on NQ per one contract.
And how easy is it to learn that or know that? Is it pretty simple?
Yeah, so the information's out there. This is what I try to tell people. The learning curve is going to be very simple. The same way you felt lost going into Forex, I'm sure the first couple months, hopefully faster, right? With the resources that we'll be putting out and everything here, we want to shorten that learning curve. But as far as going into any financial market, futures is no different. You're going to need to understand there is a learning curve at the beginning, but as far as time and work goes, it'll be the exact same as when you learn Forex.
What about spreads? Is the spread similar to Forex?
So indexes are actually better. Sometimes we see, so we'll get to it next, I'm sure, what a tick is. But indexes sometimes can be as tight of a spread as 1 or 2 ticks. And that is extremely, extremely tight conditions. Currencies, I will say, you might run into a little bit more hit or miss, like major currencies like the Euro, USD. That is going to have a very tight spread, minimal slippage. If you get into micros though with currencies, that's where the liquidity might not be as good. But as far as indexes go, the spreads are actually much better compared to cash USD 100 or US 100, excuse me, in a Forex space. So index is definitely much better. Currencies, the larger pairs will be an improvement, but that can be a little bit more hit or miss.
I only have one question off the back of that. What the hell is a tick?
Yeah, so a tick it's basically your version of a pip is what it really is. It's the smallest value, the minimum value that an asset can move in the futures market. So we're using the example of ES. Like I said, 1 point results in a net gain or loss of $50 on one contract. It technically moves in 0.25 ticks. So the way the contract is written out is that you gain or lose $12.50 per tick. But I like thinking of it in point values since I'm not scalping on the 10-second or 30-second time frame. I like thinking of the contracts in point value. So ES, how I like to teach it is $50 for a 1 point move rather than $12.50 for a 0.25 tick. I think that adds some complication that you really only need to pay attention to if you are scalping.
So you mentioned it already, so I guess the answer is yes, but can I trade things like gold and Euro USD and currencies on futures?
Yes, you can. So currency futures are a huge market, and when you mentioned Euro USD, obviously that's going to be the pair in Forex, Euro/USD. In futures though, what we're going to be trading is /6E. That is going to be the euro based against the US dollar. That is going to be your future ticker that you're actually trading. So it is the same asset, but again, remember the contract size is going to be different compared to just one lot of Euro USD. Something to note there though, like UJ is a very popular, obviously, asset in Forex. There's only the opposite offered. So futures market, everything is balanced against the US dollar, not forward US dollar, right? So realize if you're a UJ trader, there's going to be an adjustment there that you're now trading JU, So it's obviously exposing you to the same market, but you actually be trading the other way if you're a UJ trader coming to futures. But Euro USD, nice one. That is the most popular futures currency wise. That is the most commonly traded one.
What platforms do futures traders use? In Forex, we use pretty much TradingView.
Yeah.
Is there a different platform or is it the same?
So TradingView, every single tool you have in the Forex market, you're going to have for futures as well. I learned actually on Thinkorswim. Like, I was not like a TradingView guy. I kind of came into it when I met more Forex traders and more, honestly, it was like SMC traders that I found loved it. So just kind of learning from them, I picked up on it. I love the short and long tool, position tool. That's really all I use TradingView for. Most of my analysis I've always done has been Thinkorswim though, because that's the platform I learned on. As far as actually trading, Tradeovate is a very popular one that I use. That is one we offer here at Alpha Futures. That is one of the more popular ones, but NinjaTrader, very popular one as well. But any tools you have on TradingView for your Forex analysis, you'll have on futures as well.
How do contracts work? Because I know obviously you've broken down the value of contracts, but I know there's different types of contracts, right?
Yes, so there's going to be, depending on the asset, indexes, for example, are only quarterly expiration, while some currency pairs like Euro USD, they actually have monthly expiration. The main thing you really need to focus on for day trading, and really most traders, the way they need to attack it, is just make sure you're trading the front contract. And what that means is the one with the highest volume. And Euro USD, for example, since it does have monthly, it's typically, number one is going to be the current month. So it's May now, the May contract is the one you want to be day trading, or the June expiration that obviously happens to be next month right now, but because it's the current quarter is the one you want to be trading. So when you get into currency or monthly expirations, you can kind of, if you really want to, you could trade the quarterly expiration, not the monthly, but for most people, they want to just go with the monthly expiration.
What does expiration mean though? Does it literally the contract expires?
Yes.
Does your trade expire alongside it, or how does that work?
So that's kind of what you see in the prop space right now. Why they don't allow swing trading is because they don't want people holding through expiration. So in the real world, technically, if you're trading soybeans and stuff, you are agreeing to get soybeans delivered to your house. Obviously with the index, they're not going to give you 50 S&P 500s. That's usually settled on cash depending on the value of the contract. So if you want to hold through rollover, you'll get some sort of payment back from the market, or if you lose, obviously you now lowered your margin requirement. So that's why most people are not holding through expiration, and that's why prop firms don't allow it, because obviously in simulated funds, hey, we have no profit to pay you out on because you held that to expiration. The contract's gone now. So for most people, you don't have to worry about it in the prop space, but personal preference and stuff, I tell people on their own funds, don't hold through expiration, especially just because you don't know what the market could quote that contract at.
When you said highest volume, is there other contracts that are lower volume? So let's say if you said the monthly and the quarterly, is there actually contracts beyond that?
Yeah, so like if I wanted to, I could trade a contract 9 quarters out, which that's what some big boys and stuff are doing, because they actually maybe are speculative very far out. As far as day traders go, that liquidity is not going to be ideal. Almost like options contracts, the way you only see like very large funds trading, huge leaps because they don't really care about the liquidity intraday, catching the moves. Trading further out contracts will be the same way in futures, that it's just not ideal for day trading, but they do exist.
So with futures, are they centralized?
Yes, so that is again a huge advantage of why I find myself trading futures. So everything is pulled from the same exchange. It's the CME in Chicago. That's the Chicago Mercantile Exchange. So really nice thing that you don't deal with in futures is all these different brokers having different spreads the way you get in the Forex market. Everyone pulls from CME, Chicago Mercantile Exchange. Everything is centralized. Everyone is getting the same price, the same spread. So a little bit more of an even playing field. So obviously, like, you're avoiding, major slippage. That is a huge, huge pro for our futures compared to Forex. Don't get that. And the centralized markets are the big one, obviously. Being a centralized market is why that happens. The CME, future space was similar to Forex at one point, that these brokers were offering different spreads, people getting in at different price. And that's, again, the Chicago Mercantile Exchange was eventually created to centralize all of this, and that's where futures go through all the time since the 70s.
You mentioned already that we talked about contracts, but also you said minis earlier?
So micros, I think is the word you're looking for. So minis that's technically what just the S&P 500 mini future, that's what ES is called. Looking for micros though, nice thing is micros are going to be 1/10 of the size of a typical contract. So remember, ES before is 50 leverage. ES on a micro will be 5x leverage. So ES, right, is our major future. That is the most popular contract out there. The micro is going to be MES. And NQ would be the same. So obviously slash NQ, we get slash MNQ. That is same thing. So instead of the 20x leverage, you now get 2. So it is a great way for beginner traders to really start to feel out how futures move. That's what I recommend. A nice thing too, actually. So we mentioned for you, Euro USD actually does have a mini. It is one of the few currencies that does offer a mini just because it is so popular. So those Forex traders coming over, this is actually what I really recommend they start with. It does have a micro. So again, get used to
M6E.
Yep, that is going to be the micro.
What should I do, or what in futures trading should I avoid? Is there anything I should avoid trying to do?
Trading those very far out contracts is what I would say, because realistically, you're probably doing it by accident, right? Because nobody wants less liquidity. So it is just paying attention that you need to load the correct contract into your broker. So
is there anything to look at or to really just try and observe?
So I recommend actually going to the CME website, and you can just go through all of the different assets. They're listed right there. Like for you, you would just click right on 6E. It would pull up all the available contracts. Like the May one right now is probably written as, we'd have to check on the website, but I bet you it is just 6EM. This is technically the contract you would want to trade. And the December one, for example, is slash 6EZ. You don't want to be trading that one right now because there's not going to be any liquidity to it. So you do need to go check, but just make sure you are loading the correct contracts into your broker.
And is there any tools, we talked about TradingView, any tools on TradingView that would help me as a futures trader?
Which ones, like, give me an idea of what you'd be looking for? Because anything you use in Forex probably exists on the futures side, but if there's a tool in particular.
So like maybe any indicators, anything like that?
So I just trade with VWAP personally. That's the only indicator I use that is obviously available on TradingView, and you can put it on any futures chart. But as far as indicators go, whether you're using some sort of squeeze or EMA, that's all available on futures charts as well.
What about ICT Strategies? We love it over here. Does it work on futures or not?
Absolutely. So I don't consider myself an ICT trader. I do take bits and pieces of every impressive trader I meet, like just trying to understand their strategy, how I can apply it to my own. Like I see imbalances and stuff in the market that, somebody as an ICT trader is marking that up like, oh, fair value gap, this is the trade I'm looking for. I more so will use those imbalance fills as almost like to set a price target for myself. And you will see liquidity grabs, the way you do in ICT style trading and Forex. You see liquidity grabs, fair value gaps. All of that analysis still applies here.
What about kill zones? Timing the market, is that?
Yeah, absolutely. So just like any other market, again, especially the US-based indexes, of course, when we get fundamental news, there's going to be an influx of volume. Futures react the same exact way, and you can see those volume spikes. And it will be similar to Forex, right? When we're transitioning out of the Asian session into the New York session, of course, you're going to see those spikes in volume. Absolutely applies.
Would you say it's more complicated than Forex?
I really wouldn't. I think you put both in front of me as a completely green trader, like never seen either before. Both are going to require their own learning curve. I bet you the timing is extremely similar though on them. I actually did learn Forex first because I was trading in the prop space and simulated CFDs and whatnot. I eventually found futures because of everything that's happened in the prop space with being a US-based trader. That's eventually when I knew what futures were, but I wasn't trading them full time until really the prop space started to look a little shaky in the US about a year ago. So I think both require very similar learning curves in time, but I don't think one's more complicated than the other.
Seeing as you made that transition, is there anything during that transition that stands out to you that you could tell me about? As be like, okay, watch out for this, or just make sure to understand that, if that makes sense? Yeah,
big one is going to be that front contract. I know we've said it several times, but I wish somebody told me that a year ago, because there was a couple times I had no clue I was trading, the less liquid contract, and I was like, man, that feels a little weird. Like futures fills are usually great, and then I look, So
is that what happens because of the lack of liquidity? The orders.
Yep, that's when all of a sudden you'll get a not so great fill, right? And it's not slippage in the sense of Forex, and all of a sudden the spread widens and there's no explanation. It's like, no, you were trading a contract that didn't have any liquidity yet because you were 3 months out. So I know we said the front contract a bunch, but that's honestly, I wish somebody sat me down and told me that at first, because that was my biggest hurdle. After that is, hey, I have my edge, I have my trading style, I've got the contract, I'm ready to go. Cool, I can execute as I usually do.
In Forex, what was interesting is I see a lot of people don't realize that at 10 p.m. in the UK, that is UK time, the market closes and then therefore spreads widen, right? Is that the same in futures or no? At the daily close?
On the indexes, you really won't notice a super wide spread overnight just because there is still so much volume there. I bet you on Euro USD, yeah, I bet you will see that spread a little bit wider again just because the liquidity is what tightens spreads, obviously, always. The indexes, it's really not a huge difference. You could trade them all hours of the day and still get a really, really solid fill.
Which one do you think is easier to make money?
Neither, right? If it was easy, everybody would be doing it. Why don't we jot down some pros and cons that we can do here, but hey, in general, both are gonna be challenging to become a profitable trader. So, major pro of futures is obviously gonna be the fact that it is centralized, and the reason why that is so important is going to be our fills like we talked about. We are all trading from the same centralized exchange. We're not going to deal with slippage, not going to deal with the crazy spreads that we don't know where they come from in Forex. So that is a huge pro for futures, and obviously, so transitioning to futures, I'm sure you've had this experience too, but there's been plenty of times on a prop firm, I'd be trading NAS 100 and not really a major news event comes in, but like kind of an orange folder. All of a sudden I get this massive slippage, and I mean, I've lost probably $3,000-$4,000 on slippage in a single trade before. You are not going to get that with futures. You will get that tight spread. Even through news events, the spreads will stay much tighter than you'll see with the slippage in Forex. So again, a huge pro for futures. I mean, personal experience, I've definitely lost plenty of money with slippage. That's obviously going to be a con for Forex here, is going to be that slippage. Of course, be fair, we need to talk about a con of futures. I was talking about before, you do have to close out your contracts. In the prop space right now, futures, the reason for that is so people do not hold into expiration, but that does take away the ability to swing trade. So you can swing trade futures on personal account. I actually do it all the time. That's how I like to trade them a lot too, in addition to my funded futures accounts. But you cannot swing on prop firm futures accounts. So let's put no swing trading. And that is obviously a pro for Forex, is you can pretty much trade whatever strategy you want, right? So not that futures necessarily takes away your edge, but if you are more of a swing trader, you're going to be limited there. So Forex, maybe a little bit more flexibility on strategy.
So I guess the news events that you mentioned earlier, even though it's centralized, so were you saying the news doesn't affect futures as much?
The slippage, like the spreads don't get as wide. You will see a little bit of an uptick in spread, but not to the extent you see in futures. So like you will still see like you talked about kill zones and stuff, you'll still see those massive moves. You still can lose a lot of money, I'm not saying that, but you will notice the spread will stay tight. It will still move violently, but your fill price will stay with
during that time?
Yes. Yeah. Yep. So you can get filled at a reasonable price even during the news event, but it's still going to move violently. Still going to move violently.
Being a Forex trader for so long, when I tell people I'm a Forex trader, as soon as they hear the word Forex, they just kind of write it off or think it's not serious, or they get a bit, I don't know, shady or something like that. Is it the same when you say you're a futures trader? Or?
I would say the opposite, actually. So the reason I think you get that reaction is probably mostly from people from the US, I would guess, and because Forex is so, I mean, no pun intended, but it is so foreign to so many US traders is why you probably get that reaction. But big reason why futures has kind of that positive reaction is the centralized part, and this is again pro for futures, con for Forex in my opinion. There are tons of extremely talented CFD traders in the world. And I kind of asked myself, why aren't these guys getting recruited to some of these big firms, right? Like prop firm trading changed my life, it's great, but why aren't they getting access, 10, 20 mil? It's because CFDs are not a centralized exchange. Futures, you are proving you know how to trade in a regulated market. So that is a huge thing for futures, is it's almost building a more serious resume for yourself. And that's actually something we're super excited to do here at Alpha Futures. We're launching tracker accounts. So meaning if you were funded with Alpha Futures and account turnover will happen, we'll continue to track your all-time portfolio performance as a funded trader. And the idea here is we want to help you build a resume, get you up with the big boys. So I'll put that as a pro for futures. I'll put big boys. That's really what they're watching, is going to be futures. And we want to be the ones that help traders catch that, really their big break, get to that next level. That's a huge passion project we're working on here at Alpha. So that passion project of ours, what we're, like I said, really trying to do is help these traders create resumes, not just as a day trader though. If we can help them with our connections and our plans we have in place right now, get very high up job opportunities in the financial space, even if that doesn't mean, day trading every single day. They've proven though, they know the market, and we help them on that journey so the big boys come find them, is really what we're looking to do.
To finish up on that, what would be your top 3 tips to a Forex trader looking to transition to futures? What would you say is the most important piece of advice for them?
Don't mean to repeat myself, but first thing is going to be understand what front contracts are. Number 2 will be understanding the sizing of those contracts, which we kind of went over big ones for me. We're going to be ES, which is 50X, NQ, 20. And then if you want to trade YM, I don't trade it a ton, same as US 30, what you're familiar with, that's going to be 5X. So understanding your sizing. And then number 3 would be starting with the micros. I cannot recommend that enough. Thankfully, I started out that way. I was deep enough in my trading career. I had kind of the maturity to say, hey, I'm going to start with micros. I do trade full-size contracts now, but my first probably 4 months or so, I was only trading micros, and I'm extremely grateful I did that. So that would be number 3.
Well, Ben, thank you for all the information. I've learned a tremendous amount. I hope everyone at home learned a tremendous amount as well. I am seriously considering looking at the futures market now that I have a better understanding. Make sure to do your research off the back of what Ben has shared with us. Hit subscribe, hit like, drop a comment with your biggest lesson or what more information you want to hear from Ben in the future. Until next time, take care.